What's the problem with relationship managers in private banking? So in this video, I'm going to talk about the problems associated with the private banking relationship manager. And before doing that, if you're a high net wealth individual or an expat in particular, go over to adamfire.com and see how I can help you, and indeed have helped many people like yourself in the past. So private banks, they usually use relationship managers, which are like back office people, but sometimes they're more like advisory kind of people. And typically what happens is once you open up an account with a private bank, you're assigned a relationship manager. But what tends to happen is either every year or every few years, your relationship manager changes. And the only reason why more people don't complain about this is that, believe it or not, despite all the scandals in the private banking sector, the global financial crisis and so on, some people still trust the big banks. It's interesting, when I was watching the Bernie Madoff documentary on Netflix, they're making the point that, again, a lot of the big banks were quite implicated in that. They probably knew, at least his main bank, what was going on. The point is, the big banks have been actually shown over time to be some of the most corrupt private institutions in the world, which is one of the reasons why banks like Revolut and why those new fintech banks became more popular in recent times. But having said that, despite all the issues with the banks, and despite the fact that you could argue compared to 50 years ago, fewer people trust the banks, there are still some people who trust those huge banking institutions. Despite all these problems and despite issues I've mentioned before with the big banks, like for example, where they'll call customers on a so-called security call after they've made an investment for another company, when really they're just trying to keep hold of the money and so on and so forth. But what's interesting, I think, about this model is I've run out of the number of clients who have approached me, typically in their 40s, 50s, 60s, early 70s, who have said that when they were in their 20s or 30s, they wouldn't have considered going to a bespoke company, but now they've got more experience, they do actually see the benefit of that. In other words, just as if you go to a boutique hotel, you might get better service than staying at, for example, the Hilton or whatever. When it comes to financial services, I have found that is the case. I'm not just talking about wealth management, what we do, but also when it comes to, well, I gave an example, banking. I have personally had much better experiences with those banks like the Revolut and Wise of this world than actually the big boys. And that's the experience actually most people have. But I think what's normal for people, especially if someone's high net worth, let's say they don't know much about financial services, they've sold their business, they've built up a business, they've sold out maybe a tech business or whatever, and they're relatively young still, maybe 29, 30, 31 or whatever. It's very normal, I think, still for some people to think, oh, the big institutions, the big banks or whatever, they are trustworthy. So also another thing that some people think is, well, at the end of the day, they might not be the best, but they're not going to go to zero because, I don't know, the government will bail them out or something. Better safe than sorry. But in reality, once people deal with these institutions for a long period of time, you'll find that most people do look for alternatives to these large financial institutions. And also, I think it's the same thing when it comes to investing in funds. Now, when it comes to investing in funds, I think it is a bit different because some of the big boys like the Vanguards, the BlackRocks and so on, some of them offer fantastic funds. It's not like the banking sector where very seldom, if ever, have I had a good relationship or a good experience with some of the big banks, whereas I've had loads of good relationships with the smaller banks or the ones who are newly big, like the Revoluts and Wises of this world. When it comes to the fund industry, it is true that some of the big boys do have excellent funds. But by the same token, when you start to go into, say, emerging markets or whatever, some of the more boutique funds have excellent funds. And so really, we shouldn't think the size always matters. And it's interesting that even when it comes to the smaller companies that become big, the initial investors are the ones who actually make the most money. So if you think about it, these small funds that get big, you get rewarded coming in early. So for example, I was reading a paper, I was talking about Peter Lynch's fund, and Peter Lynch's fund beat the S&P 500 easily for 15 years, from 1975 until 1990. However, the average investor in his fund didn't make much money. Why is that the case? Because they got in near the peak. They thought, oh, it's big now, it's credible. But ask anyone in finance, and it's much easier to outperform with a 5 million or 10 million fund than it is to outperform with a 2 billion or 20 billion fund, because obviously getting high returns on smaller amounts of money is easier than on larger amounts of money. So one thing I would say is don't be too focused on size. We also see the same issue when it comes to the stock market. Some people think, oh, I should invest in blue chip companies. So if I invest in HSBC or IBM or whatever, that's safe. Whereas just investing in the whole stock market, it's not as safe because there's many smaller firms, but that's simply not the case. Because if you invest in the whole stock market, including smaller firms, it's more diversified because you get small, medium, and small cap stocks. But the funny thing is, for a lot of people out there, especially if they're new to investing, they automatically think, well, a blue chip stock, if you buy, say, 10 or 20 of them, that's actually the safest way to invest, which actually is not the case. So basically, big isn't always beautiful. And what I do think will happen is gradually the trend that's been happening over the last 15 years could continue to happen. And I think in the next 20, 30 years, the big banking institutions, unless they really adapt, their brand name is only going to go down, and we might see more freelancers in the banking industry because the current model where they kind of hire loads of graduates and they can pay them a decent salary because loads of people trust the brand name still, despite all the things that have happened. I think that will go down over time. I do think it depends on the market, though. In the more developed markets, people are more skeptical about those brand names, I think, already. In some lower trust emerging market societies, I think the big brand names in the banking world still are pretty strong, but I do think that's going to change in the future. And I think as markets become more developed, specialization becomes more important. So in other words, take the US market, for example, which is not a market that we're in. But basically in the US market, most high net wealth individuals want specialization. They want to go to their CPA for their taxes. They want to go to an advisor who's specialized in the niche they're looking for. For example, if they're an expat, they're looking for an advisor who is focused on US expats, not just any old advisor who works for the bank. Or if they're looking for a lawyer, they're looking for a lawyer who's specifically specialized in their area of need, basically. So I think as markets get more developed, hopefully as GDP long-term goes up, I also think the banking model, even though they are trying to adapt with different departments and trying to be a bit more bespoke, I think it's going to become harder just to rely on their brand name going forward.
Depends on every person's individual goals, how much money they want to invest, how long they want to invest. And I did not have at all the feeling from any bank with which I had contact with that they were interested in these things. Whereas with you, it was from the very beginning obvious to me that you had experience in these matters and also were interested in what I wanted to achieve.
Anyways, I'm very, very pleased and positive to say that I believe I've picked the right one. The results in the last couple of years have overreached my expectations by far. And I see no reason why it should not continue. Of course, I can highly recommend him as your financial advisor for now and for the future, because hesitating is missing out.
So I'm investing a lot in the Middle East market, but the amount of returns I'm getting from there is very low as per the amount of returns I'm getting from the investment portfolio which you made for me. Obviously, the best result in market right now is Adam.